This is Backroads of Illinois server to farmers and ranchers in central Illinois. This is Backroads of Illinois server to farmers and ranchers in central Illinois in the Midwest. We're glad you're here on today. I'm Cesar Delgado. I'm going to have a conversation about this growing season in central Illinois with Brett Leah from agrigold. I'm taking some time to talk about the commodities markets before we begin with the holidays with Duwayne Busses from Bolt Markteing LLC. This has been Backroads of Illinois. I'm going to have a conversation about this growing season in central Illinois with Brett Leah from agrigold. Hey Brett, how are you? And glad to have you again.
I'm doing good, Caesar, and I'm always glad to be back on Backroads of Illinois. It's good to see you again.
Brett, let's talk about this crop in central Illinois for this year with the drought over for August. Could you explain to our audience on your own experiences with?
Yeah, I think the drought late really kind of took off some top end from this crop that we did have out in the field, but overall it wasn't too bad, especially when we did get dry late. I think if we would have just got one more late rain, it definitely would have helped finish this corn out, and especially the soybeans too. So I think it was definitely something we needed, but overall the corn fared well and the soybeans weren't bad either. It just seemed like we just needed that one more rain in August this past year.
How was the heat back on June?
Yeah, in June it was really hot. It seemed like there was a day from where it went really cool and cloudy to just really crazy hot, and it didn't seem like it took very long. And I think this corn grew at a rapid pace, and we saw some results in that out in the field because of the heat. But man, it seemed like it did not cool off hardly at all during the nighttime temperatures either, which I do think probably hurt us in the grain fill period as well. But it did seem like there was a day in there, and I can't remember which day it was. It was towards the back end of May, early part of June, to where it just got hot and it stayed hot the rest of the year. And it seemed like that probably hurt us more than anything. And then, like we talked about earlier, Caesar, just with that water in August, it did not help our crop at the end of the day. But you're right, it did get hot really fast in June.
Do you see some diseases from the heat?
Yeah, that's a good point that you bring up, Caesar, because we saw some stuff this year that we haven't really seen in the past with diseases. We thought it was going to be really good for tar spot, how cool and wet it was early, but then the heat turned on and then the dry spell happened too, and the rust came up really bad from the south. And I think that probably limited our crop's overall potential more so than the heat this past year. And it was rust like I've never seen before. If I had to go down south, I'll see that kind of rust pressure, but not up here in central Illinois. It was really bad from what I saw.
The commodities markets, especially in corn and beans prices. Do you have some concerns about this grains markets for your growers?
Yeah, I think looking at the current cash prices for corn, they're not great, but I do think there was an opportunity to capture a little bit more price for corn, especially if we were looking at futures a while back ago. But I do think the soybeans are a little bit concerning too. They did make a little bit of a rally here as of late, but I definitely think that was weighing on some options for production in 2026 crops for some growers. And also, too, if you talk about the grain prices, I think that's definitely going to make a huge impact on some of these fringe acres out in the countryside in some tougher areas, whether they're going to be going to corn or if they're going to be going to soybeans. And I think anhydrous too, we had a pretty nice fall for anhydrous. So I think if growers were able to capitalize on applying that anhydrous in some spots, I do think corn will stay on those acres because the anhydrous price wasn't too incredibly high this past year. So I do think it was a pretty nice input to apply to those fringe type acres there, Caesar.
Do you have any thoughts about input costs are skyrocketing high into next year, Brett?
Yeah, we saw that this past fall. We saw that phosphorus price really increased on us, and it was not ideal to apply a lot of phosphorus. There was a lot of growers that I deal with that put on removal rates and kept phosphorus in that blend, but potassium wasn't terrible for an input price overall, and as well as anhydrous. So I did recommend making sure to get plenty of potassium on that acre just because it can be a limiting factor in overall yield. And we do have a lot of phosphorus. So if we're going to look at making recommendations for the next year, definitely look at our soil test. I think that's where it all starts, is making sure we're adequate and we're balanced on our soil fertility and definitely applying the right nutrient at the right location. Definitely maximize the efficiency of our dollar and how far it will go for our 2026 crop. But yeah, you're right, Caesar. Those input prices really skyrocketed on us, and it was not fun to look at that and write the check for those input prices this past year.
How could we combat against it for next year if we see it again?
Yeah, that's a great question. So I think the first thing we have to do is look at our weather patterns because we do know that southern rust does not overwinter up this far north. It's only going to overwinter down south. So I think what we have to pay attention to is that overall wind pattern. I do think we had a lot of southern winds this early spring going into the summer months, and that did blow that southern rust north into our world, which is not good. But I definitely think one thing we have to keep in mind is there's a chart on the internet. It's called fungicide efficacy charts. And we have to look at those charts to see what fungicides will map up to the disease we're trying to target and see the efficacy. It's just like, if you pair something together, you want to have the right marriage between both products and disease. So I think that's going to be our best mode of action as well as early scouting. If we start to see some southern rust specks early on, I definitely think we have to pull the trigger. And I did see a couple instances this past year where two fungicide passes on bad southern rust acres definitely paid for itself. So I do think we have to look at those charts and be proactive out in the field when it comes to scouting. And that's the same with tar spot too. We have to be really proactive with both of those diseases and make sure we're ahead of them instead of behind them. And I think that's our best mode of action as we go into 2026 for sure.
Of course. Finally, I want to talk about next year. There is a lot of uncertainty within the grains markets and inputs. Farmers are concerned about the payment, and they are having a conversation about farm prices are looming like in next year. What is your thoughts on that?
That's a good final question. I think that we definitely have to look at the books harder this year. We have to be strategic on where we can cut, where we can't cut back on, and make a farm by farm recommendation. And that's what I try to do early in this fall, in kind of the middle of fall months, to sit down with the growers that wanted to go over each farm and kind of get a plan by field by farm, just to narrow it down instead of doing that whole farm approach. And I think it's going to take a little bit more planning, especially as we get tighter on grain prices as they continue to decrease, and hopefully they go up, right? And that's our hope, is they go up and input prices go down. But if we see the trend of grain prices go down, input prices go up, I do think we're going to have to put pencil to paper and go field by field a little bit more just to try to get a better idea of where our dollars are going to be allocated. And I think we'll be more efficient with our dollars if we do it that way. But going back to soil test, I think we have to look at our soil tests and dive deep into those and definitely get our fertility where it needs to be on those fields. And also too on chemical programs, we have to be a little bit more strategic on those as well. And I think just overall in general, I think we have to just be a little bit more strategic and kind of pay attention to each field as its own instead of the whole farm. So I think that's where we're going to have to try to trend towards Caesar.
Just make sure you are talking to your local dealer.
Correct. I think that's going to be huge is the local touch and try to get another opinion because, I get opinions on everything too. And it doesn't hurt to get another opinion on anything. I think it's just good food for thought for everybody for sure.
Thanks, Brett, and I enjoyed our conversation. You have Merry Christmas and New Year.
You too, Caesar. Thank you again for having me on your podcast and have a Merry Christmas as well.
This is Brett Leah from AgriGold for this afternoon on Back Roads of Illinois. I'm taking some time to talk about the commodities markets before we begin with the holidays with Duwayne Busses from Bolt Markteing LLC. Hey, Duwayne, how are things in South Dakota with the cold weather in for right now?
It's going good up here. You're right. We have been very cold. Weather's been kind of sporadic. We had a good harvest. That went fine weather-wise. And then we got a nasty big snowstorm, the first one of the year. We've already had, what, two snow days for the kids where they canceled school. So that's kind of crazy before Christmas. But now the snow has settled a little bit. The sun is out today, so it's not too bad.
Duwayne, let's discuss about the fundamentals on the corn markets, especially with Christmas time and the New Year. What is your position on the fundamentals on the corn markets?
I really like the corn fundamentals here. Yes, we planted a unbelievable amount of acres, close to 99 million. USDA right now is at 98.7. Some think that could go even higher in upcoming reports. So obviously that would be slightly bearish. But even though we had this huge crop, demand is stellar. It's fantastic, actually. Export demand has never been this strong before. Ethanol demand is good. Domestic demand is good. I like all that. The reason I'm bullish and like the fundamentals is I think that yield is going to come down in the future. Right now, USDA has us at a 186 for national corn yield. I think that could drop as low as 182 in January. Once again, we had a hot, dry finish to the year, and not to mention, so I think that robs some of the crop of its higher yield potential. But also, when you plant 99 million acres, that means you're planting in some of the fringe areas like my area in Northeast South Dakota, and our yields aren't always as high as the I states, right? Like where you're from. So I just think it's hard to yield above a 180 when we plant this many acres.
What is going on with the beans markets for right now because it's slower than we thought?
Yeah, beans are slow. Actually, you know what? All the markets are kind of getting into that holiday mode a little bit, aren't they? I think what we're finding out in soybeans is that, well, we are finding out the commitment of traders reports have been delayed due to the government shutdown, right? Well, we've learned that when the market rallied to that like 1170 area for beans, the funds were aggressive buyers. They were probably very close to record long, actually, the managed money. And ever since then, they've been liquidating some of those long positions, kind of on a buy the rumor, sell the fact when it comes to China buying US beans. Once they've actually stepped in and started to buy, and we're getting daily sales announcements, we're actually selling off. Some of that has to do with these funds going into what, like I had mentioned before, the holiday mode, where squaring up positions, going to the sidelines, taking a long extended break, and then they'll, I think, come back in January and be buyers again, either due to lower yield or an inflation play, maybe.
How about the technical buying?
Chart wise, today we got to some key points. For soybeans, we fell into the gap areas, right? That we left during the nice rally we had up. We didn't fill the gaps completely. I'm looking at the January chart here. We hit a low of 1067 today. I believe we had to get to 1062 to fill that gap. It's fine to me if it doesn't fill that gap. Either way, I think we can start to move back up here again. The problem is it's only December 5th and I'm already talking, or December 15th, and I'm already talking about a holiday trade. Well, we're 10 days away from Christmas, and the week after Christmas, the markets don't move a whole lot either. So we've got to just get to the point where the funds have liquidated the long positions they need to for the holiday. And I don't know, we might be close to that. The market's already oversold. I think we could rebound. China is in buying our beans now, and we're price competitive in the short term. I think the other problem we have today isn't technical, it's weather driven. South America weather over the weekend, Brazil got plenty of rain. Argentina is trending a little bit drier, but they've been cooler so far too, so it's not hurting the crop yet. And remember, Argentina is still planting, so but if the weather's good in Brazil this time of year, it'll just put some pressure on our soybean market.
Sure. How is the cash grain? Could you explain to our audience about the beans deal for this year with China? Do
Well,
you
I'll
have
do.
any desire to have China with our book for next couple months?
Yeah, I'll do my best to explain the China deal. I don't know if anyone's for certain, but obviously, there's politics involved. There's a trade negotiation team, the Trump administration. There's more to just being supply and demand. I'd like to just say it's just supply and demand. If they need our beans and they're cheap enough, they will buy them. If Brazil's cheaper, they'll buy from there. Now, that works on a lot of cases, but like when you talk about the rare earth metals and we have things that China wants, I think China will come in and buy a few beans from us, even if they aren't economical. And that's kind of what you're doing here is they're coming in buying them for the reserves. I think it's very important to watch. They're auctioning off soybeans out of their strategic reserves now. They did last week and sold what? A decent percentage. Demand looked good. They'll do another sale this week. As long as those sales create high volume and a lot of people buying, that shows demand is good in China. And the more of those beans they sell out of reserves, the more cash beans they'll buy from us to refill those reserves, replenish. Our basis is still poor, especially up north here, but we are starting to move some beans out to the PNW. So I see the basis getting a little bit better, but after about January, I don't know how much better the basis will get to be, but I do see improvements in the cash basis coming forward.
Sure. But are you concerned about this deal for the future until 2030?
Yeah, I am because you could probably tell in my last answer, I'm more of a fundamental guy and an economical guy. I mean, if our prices are cheaper than Brazil, I think China will buy from us. But if Brazil continues to increase acreage and raise this monster crop, we're expecting right around 175 million metric ton this year. Supply will be plentiful and the price will be low, and China will buy from them. Like I said, I think to restock the reserves, I think China will buy some from us. And come, the fall of the year, we'll probably be cheaper than Brazil is. So I think China will step up and buy from us then. But honestly, as far as like a long term, do I think they're gonna buy that 25 million metric ton every single year as a baseline and then maybe more? No, I really don't think so. I mean, I think it's just all about economics.
How is the cash grains markets for right now in South Dakota?
They're improving. The corn basis is improving a little bit quicker than beans. We're still got a wide basis, but we had large crops, so that's to be expected. For once, we didn't have much prevent plant this year in the Dakotas, so we covered the acres, elevators got full, but things are moving. Like I said, we're even exporting some corn out of here, moving corn. Trains are coming in. It's getting better, but it is a slow process. There are some piles left out there. I see the basis improving, and it really has. I shouldn't make it sound like it's negative. It has been improving the last, I'd say month for corn. Beans have just improved only slightly. So it's getting better, but I don't know if it's going to pay for storage, just basis improvement alone. Like I said, demand is great, but it's going to take some time.
How about the wheat markets for the Northern Plains area?
Yeah, not great to be honest with you. It seems like that poor wheat market, every time we think we can make a bottom and start to go up, somebody announces they have record production. It's record production expected in Australia. Argentina is expected to raise a record crop. And just recently here, up north, Canada announced that they have a record crop. So it's kind of been negative news one after another. And that record crop in Canada, of course, will spill across the border some and keep our bases fairly wide here. So I don't think wheat prices have to go any lower, but I sure don't have a bullish story that makes them go higher here in the short term. When wheat had a tough day today, it followed corn and soybeans lower, but for some reason it couldn't follow either one of those markets back up into the close.
What is your final thoughts about this year with these grains markets and counting the livestock markets?
Um, I think my summary today is that this market might get a little boring in the short term here. Maybe not the cattle market, that never seems to be boring. But for corn and soybeans, I feel like we've had our big pullback. We obviously had the funds buy a lot of contracts back in November and October, and we didn't know they were getting that long. And now they're hitting the reset button. I know nobody really likes these prices. So, I don't think you have to be selling here. I think you should wait. With me being so bullish that January report, I really like producers just hang on and wait till then for both corn and soybeans. And like I said, wheat, I feel like it doesn't have a bullish story, but I don't think it has to go lower. And wheat export demand has been strong. So kind of a let's just be patient here for a while. And boy, that January report could really change everything if we lose some yield in the US.
Thanks, Duwayne. I hope that you are enjoying your holidays. Merry
Yeah, thanks.
Christmas.
Merry Christmas to you too, and thanks for having me. Yes, I absolutely will enjoy everything, every bit of it.
This is Duwayne Busses from Bolt Markteing LLC on back roads of Illinois. You have a great day.
You too, thanks for having me.